Everybody, how are we doing today? If I can get a quick audio and video check, let me know that coming through loud and clear, and that you can hear my screen here, or hear me and see my screen, excuse me. Just let me know that we are up and running. I appreciate it. If you can just type it in the box there. All right, thank you guys, I appreciate that. Okay, well, hope everybody's had a great week and appreciate you joining us here today and taking some time out of your day. And we appreciate Nadex for having us on today. My name is John Skelton. I'm with apexinvesting.com. And the webinar today is hosted and brought to you by Nadex. We appreciate them having us on. You know, Nadex does these webinars and has us on here to, offer their members just some free education to help you understand who and what is Nadex, what are the products that they offer, and what are some ways you can incorporate them into your trading. And that's kind of what we're here for, is just to help give you some of that education, give you an idea of some ways that we trade the market, some ideas of how we utilize the Nadex products. And that's what I'm wanting to share with you today, is just do a kind of brief overview about trading volatile markets with Nadex Binaries. We'll talk a little bit about what is a volatile market, and I'm going to just show you one or two of the ways that we choose to trade volatile markets with Nadex Binaries. One of our strategies, what we're looking for, and see if it can be helpful to you, help you incorporate in. So let's go ahead and get our disclosures taken care of here. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Also, guys, any examples here that are used are not a trading advice or a recommendation to buy or sell, or solicitation to buy or sell any futures, options, bonds, binaries, or spreads. If I'm showing you the Nadex platform and I'm entering an order, that's simply me just helping you visualize what it is I'm trying to teach you that day, or visualize how to actually utilize the Nadex platform and execute orders, okay? And as always, past performance is not indicative of future results. So if you are brand new to Nadex, make sure to hop on over to nadex.com. Couple key things you need to know here. You can go up to these top tabs here, and basically Nadex offers two different products. They offer binary options and spread options. You can go to these two tabs here, get some information about that. You can go up here to market news, kind of see what's going on with the markets. Might help you formulate some trading ideas there. And right here under trading platforms, you can go directly here to the online platform. There's some mobile applications here, but right here, demo trading platform, okay? Nadex will give you a free $25,000 demo account. All you have to do is fill out some quick information here and hit open practice account. If you don't have one of these, hop on right now and get one. It's a great tool, great free tool that Nadex offers. Just a few minutes, you'll be sent a temporary password. You'll be able to log right into the Nadex demo platform. All right, great place to get familiar with Nadex, how the platform works, how to enter and exit orders. Great place to practice any strategies or systems. With demo money, you don't want to practice something new with your live money, right? That's a very expensive way to educate yourself. Utilize the demo platform, try out something new, master it, make your mistakes in demo, work out the kinks in demo, become profitable in demo before you move over to your live account, okay? One key thing here, once you sign up for a demo account, as soon as you log in, go up here to My Account, and then go right here to Settings, and then Password. You'll be able to change that temporary password they send you to a password of your choosing, all right? So make sure to take advantage of that right there. Also on the, on the Nadex website here, one other tab right here, Learning Center. Some great resources under here, some great videos and trainings. If you go right here to webinars, right here there's me right there. You can see the webinar you're on here, but if you click upcoming webinars, this will let you know all of the upcoming webinars available to you. You can check them out, see what all is going on, get registered for those, get reminder emails for those, okay? If any of you are new and anything today we might be covering is kind of over your head, don't worry about it. What you can do is go right here to On Demand, and you go right here and find me, John Skelton with Apex. And this is a great source here because this is where all the webinar recordings go. Today's webinar is being recorded as well. And you can go back and watch any webinars you missed, okay? And you can go through here and get some free education anytime you want. All kind of great information here going all the way back to, if you go to the page 2 here, basics of Nadex spreads. Maybe you don't know what Nadex spreads are, okay? Binaries 101. Everything from very basics beginning, building on top of that of, what are binaries, how to choose the right one, how to trade different levels, what are some of the top mistakes, what should I trade, all kind of good stuff in here. Just a wealth of information just right there and ready for you. So definitely take advantage of those. Excuse me. Like I said, my name is John Skelton with apexinvesting.com. We're a, Apex and Nadex, two complete separate companies, right? Nadex is an exchange. Apex, we're an online education company. We've got over 25,000 members. We focus, a lot of our strategies and systems focus on risk management and probabilities. That's why we love the capture risk products of Nadex. We have live trade rooms and indicators and strategies and systems. We've got a bunch of step-by-step educational courses on binaries and spreads. Feel free to check us out over there. We're a Nadex education partner. We're traders just like you. Okay, we do these webinars with Nadex, like I said, to help you, understand what the products are, some ways that we trade them. I've been with Apex now for about 5 years as head of operations. I've got a background in the banking industry and as a licensed stockbroker, and I'm a trader just like you. Okay, and that's what we're here for. All right, so let's talk about today's subject, trading volatile markets with Nadex. All right, and talk a little bit about reading the markets and what is a volatile market. Okay, well, we've all had our days where we've seen the market just zipping straight up or zipping straight down, right? In trending markets and strongly trending markets. We've seen the days where they're very range bound and just choppy and flat, okay? But sometimes there's also what we call volatile days, where they're not really just sitting there flat, but they're not clearly trending, up or down. And even if they are slowly trending up and down, they're doing it in a big zigzag style, right? It shoots way up, then it shoots way down, then it shoots way up and shoots way down. It's just like this big roller coaster type ride. And sometimes it's moving, pretty fast too. And you're not always sure how to trade that, right? It's like, well, it made a big zip up and then it came back down, then it zipped up. Is it going up? Is it going to break? What's going on? And sometimes you're not sure how to trade that. And I've talked to a lot of people that feel like, oh, I cannot trade on those days. I can only trade on trending days or only trade on these little chop breakout days. But when it's volatile up and down, I just have to stay out those days. And that's not necessarily the case if you know how to trade those days, okay? And I'm going to show you a way that we trade them. And we use, for this particular strategy I want to show you, we use out-of-the-money binaries, okay? Let's just do a quick review here. I'm not going to spend a whole lot of time on this. If you've been with us in the past, you understand out-of-the-money binaries and what they are. But just quick review here. Here on the Wall Street 30, for example, here's a strike ladder, and we see over here, the offer side, what price we can buy for, and the bid side, what price we can sell for. And if you're with me last week, we talked a lot about as soon as you bring up a strike ladder, you kind of draw an imaginary line right in here around the $50 mark, okay? And as you notice here, the indicative price is at 26,160. And that's kind of right in here between these two strikes, right? 155 and 167. That's what we call an at-the-money binary range. And when a strike is right close to the market price, okay, let me show you a different one here as well, then that's what we call an at-the-money binary, and that binary is going to be priced around $50, okay? And here's an example for you here. 1694 is the indicative. Right here, 1694 happens to be this strike. See, it's around 50, the $50 range, okay? And, the at-the-money binary, at expiration, a binary is either worth 0 or 100. So when the strike price and the current market price are right about the same, it's kind of 50-50, right? It's a 50% probability. Market go up a little bit and expire with 100, go down a little bit, expire at 0. So it's kind of right on the fence there at 50. We also talked last week, for example, how these binaries here, 64, 77, these ones that are priced a little closer to 100, these are called in-the-money binaries, all right, because the statement's already true, right? this is a binary contract right here at 1686, stating that at 3 p.m. the market would be greater than 1686. Well, right now it's already 1694. It's already greater, right? And so they're priced a little, higher because of the higher probability. If we have that imaginary line here at 50 and we look down going towards 0, these are called out of the money binaries, okay? Where they're not already a true statement, they're not right at the market. The market would have to actually move, okay, to, move up in time to cause those binaries to expire in the money or to become, higher in value, okay? So they are very, low risk. I mean, for example, if we open this one up here, if we were looking to, buy this particular contract right here, you could buy it at about $21, okay? So our maximum loss, our risk would be $21, and our maximum profit would be $79. What that means is if we bought this contract for $21, and if at 3 p.m. the statement was true, and this contract expired in the money, at expiration, it would be worth $100. So we paid $21 for it. If it's worth $100, it means our maximum profit was 79 bucks, okay? So we also talked about, how binary pricing can be looked at as a probability, okay? And if you look at the buy side around 20 and the sell side around 10, kind of right in the middle there's about 15, right? So you're looking at, from a pricing standpoint only, about a 15% probability of this binary expiring in the money. So yes, it's a much lower risk. Yes, it's a much higher potential reward, but overall it's a lower probability of expiring in the money because it has to make a big move. But there are some ways to take advantage of, and I'm not saying you'd never want to do that. If you're expecting a big move in the market, okay, then you might want to look at these binaries, all right? Each of these different types of binaries, work a little bit different, and there's key ways to use each of them properly based on your strategy or system or the market conditions. But I want to talk to you a little bit about how to use these out of the money binaries, but not necessarily holding them until expiration, okay? Because you got to look at these things two different ways. One is, hey, if I had bought that for $20 or 21 bucks and I held it till expiration, it's either going to be worth 0 or 100, okay? But let's not just look at buying at 21 and exiting for a $79 profit, okay? Between now and expiration, that binary's value can go down or it can go up, right, as the market moves. And one of the great things about Nadex is you can exit early. You don't have to hold all the way till expiration. So I want to look at something here. I want to make sure you understand how this strike ladder works a little bit. So right now, where is the indicative? 1690, 1691, right? See it right there, 1691. Where is this strike? 1690. So the strike is right at the indicative, or should I say the indicative is right at this particular strike. And you can see here this particular binary, I can buy it for 58 or sell it for 47, okay? Now, notice right above this strike is a strike of 1694, and then above that is 1698, right? Now we see this 1698, we see it priced down here at 23 and 33. So these strikes are 4 ticks wide, right? 90, 94, 98. So right now the market's at 1691. If the market went up to 1699, so it went up 8 pips, okay? Let's see who's paying attention here. Right now it's at 1691. If it went up 8 pips and it went up to 16, or let's just say if it went up, about 7 pips, it went up to 1698. what would this binary right here, I'm not talking about at expiration, I'm talking about right now. 1698 is this strike. What would this binary then be priced at around? If the strike is 1698 and the indicative gets to 1698, where would this binary approximately be priced at? Right now it's at like 22 and 31. But yeah, around 50 bucks, right, Jonathan? Exactly. Okay. So you can kind of utilize this strike ladder to say, hey, I can buy this one right now for about 30. And if the market goes up to it, right, it would be worth around 50. Okay. Or what about this next one up? If I bought it for about 24 and the market goes up to that price, it'd be worth about 50. Does that make sense? So what you kind of have to do here is say, okay, if I bought this one right here, this $24 one, remember each one of these strikes is 4 ticks wide, right? That makes sense? So if I bought this one right here, 23.50, and the market goes up 8 pips, how much approximately will this be worth? Well, what I need to do is go down what? 1 strike, 2 strikes, because each strike is 4 pips, right? So if I said, hey, I want to buy this one, what will it be worth if the market goes up 8 ticks? Well, then I want to go down 1 strike and down 1 more, because that's 2 different, because that's 8 pips, right? And then I want to look over here, because if I buy, to get out of it, I have to sell. Does that make sense? Did I lose anybody right there? Okay, if I buy one right here and the market goes up 4 pips, well, that's like it being now right here, worth this. If it goes up 8 pips, it's like it's being worth this. 12 pips being worth this. 16 pips being worth this. Does that make sense? Because you can see, hey, if the market was 4 pips different, how would it affect the price of this binary that I bought? Well, how is 4 pips different affecting the prices here? Because they are 4 pips wide. Okay, so you can kind of not only just use this strike ladder as what contracts are available to buy or sell, but you can also see, hey, where would the price be? Also, we can look at it like this. If I'm expecting a 12 pip move of the market, let's just say that, okay? Say I'm looking at an entry and I see a big support and resistance level 12 pips away, okay? So I'm thinking that's where it's going to go. Well, if I bought this one for $86, right? And then the market moved 4, 8, 12. The one I bought for 86, 1, 2, 3 strike, I could sell for 89. I don't really like that, do I? Is that my best bet right there, just to make a few dollars? Okay, what about this one? If I bought this one for $15 and the market moved 1, 2, 3 strikes worth, oh, I could sell that for about 40. Buy for 15, exit at 40, that's more than double my money. Which one of those is probably your better choice when you're expecting a quick 12-tick move of the market? Do you want to risk 15 to exit at 40 or risk 86 to exit at 89? Well, obviously that one's not your best bet, right? So you can look and you can say, hey, which one of these, if I'm expecting a 12 pip move, 12 pips is, okay, basically 3 strikes. So which one of these contracts get me the most return in a 3-strike difference, right? Well, this one at 61, 1, 2, 3, I can get out at 86. Well, that's not bad, about $26. But you know, look at this one. The 15 can get to 40. What's your better return in percentage? You can see that. Does that make sense? So I can look at this and say, all right, well, I know that if I buy this contract right here, I know that it's a very low probability, like a less than 10% pricing probability, for it to expire in the money at expiration, right? But I can also see that on a 12 pip move, I can buy this for 13 and then 1, 2, 3, and get out of it at 35. So maybe I don't want to hold it all the way till expiration, but if the market makes this quick move that I'm looking for it to make, I can more than double my money on it. Does that make sense? To where, in a sense, you could say, well, it's a lower probability to hold it all the way to the end to get the max profit. But if I think it's a good probability the market will make that move to that resistance level, I can utilize that low risk binary and more than double my money in just a quick move. Does that make sense? Or if I wanted to buy this one here for about 30, and then so 1 strike, 2 strike, 3, and get out around 60, I can double my money on that one. So there's more than one way to utilize these products. Does everybody follow me there? Do you understand the difference of using a lower risk binary, holding it all the way to expiration, compared to utilizing that binary to take advantage of the move and get out early with profit, utilizing it to make that move? Does everybody see that? How that works? And how you can kind of gauge its value based on the strike ladder that's right in front of you. So that's what I'm going to talk to you about when I show you this quick strategy is, you know, I'm looking to use out of the money binaries, let's say between $15 and $25 range. Okay. Like, you know, this $13 one and exit for 35, or this $22 one and exit for, you know, 46, doubling my money. And, you know, in this range right here, because you kind of see in this range, this is where they move the quickest at getting a few strikes, right? See down here at the bottom, you can kind of see this. See like 7, 7, 7, 10, 10, 13. Like, see how like these are really all close together? But then it kind of starts getting bigger here, 20, 30, 40, 50, 70. And then right here, 80, 92, 97, 98. See how they're kind of slow down in here? You know, like from this level down, and they're slow in here from this level up. But in this little middle section is your sweet spot of when it moves a few strikes, you get a good return for your money. See it? See it on this side too. 25, 25, $1.25, $3, but then boom, 11, 20, 30, 40. Then right back in here, 84, 87, 89. So you don't want to be utilizing these here for a quick move, or these up here for a quick move. You want to look in this middle where they move faster. Can you see that now? Like just right on the screen here? I mean, if you followed what I'm showing you here, seeing how to read this strike ladder, how to tell what a binary can be valued out, and how to quickly look and say which binary will move the fastest, give me the best return, that alone right there was worth being on this webinar, because that will change a lot of what you do and a lot of what binaries you choose. Because I know plenty of you on here, when you're brand new, you look at all these buy prices, and when you're brand new, you're like, I'm just going to take this cheapest one way up here, right? We've all done it. And then you wonder, man, it moved 4 pips, I'm not profitable. It moved 4 pips, no profit. It moved 4 pips, not really profitable. Moved another 4 pip, moved another 4 pip. Man, these binaries don't work. But do you see why? You chose this one way out here for no reason. So you should have been looking in here where a 4-pip move starts and another 4-pip, another 4-pip, you doubled your money. Choosing the right one, okay? So that's what I'm going to talk to you about here real quick, is utilizing these, like, 15 to 25, 15 to 30, these binaries right in here, just looking to double your money and get out, okay? And how I utilize those, all right, in a volatile market, because we do need some movement, right? We need the market to be moving to utilize these out of the money binaries, okay? So we need to be expecting a move, and we need to have enough time between now and expiration to let it make its move. We may not necessarily be planning on it moving all day or making huge, a huge trend, but we're looking to have enough move to double our money on that low risk trade. And we know what kind of move that's going to need to happen, because all we got to do is look at the strike ladder and say, hey, if I bought this one right here for 13, or this one for 21, what kind of move do I need to about double my money? Okay, that's X many pips. Let me look at my chart. Do I have room to make that move? 8, 10, 12 pips. Or is there big resistance or deviation levels between here and that type of move? Like, is the market going to have trouble getting through there? Okay, so how am I looking to trade that? Well, don't be overwhelmed by this chart here, but I'm going to show you one of the ways that we trade volatile markets, okay? And it requires that you really understanding, volume of when you don't have a clear straight trend up or a clear straight trend down, right? The market's kind of zigzagging, right? It's coming up and down and up and down and up and down and up and down. How do you really trade that? How do you know that when the markets come back up, that it's not just going to, pop right back up or come down and go further down? All right. Well, what we're looking at here for this particular strategy, and there's many ways to trade it, but this is what we call our power play 1 strategy, okay, setup. And what we're looking at here is mainly in volume, okay? We have a proprietary indicator that we call our oscillation detector. All right, and that's these numbers right here. See this 3709 number, and see this 1727, and you see these numbers. Well, what those numbers are measuring is they're a volume number, okay? And they're not measuring the volume just in one bar. It's measuring the volume in the overall trend, okay? For example, okay, let's look at, both of these here entry, but let's look at this one right here as a quick example. Or even this one. Notice the market came up here on 3709, right? That was the total volume in this trend up. Then the market pulled back. And it wasn't just a 1 or 2 bar pullback. It was a big enough pullback for our chop filter down here to turn color. See? Chop filter was showing a green uptrend here. Then it turned colors and went back to green. Okay, we want a big enough pullback because we don't want to get caught in a trending market. We're expecting a zigzag market. But anyway, the market pulled up here on 3709. Then what did it do? It went a little bit higher on what? More volume or less volume? I always, okay, look at here. Market went up on 1900, total volume in this push up. Then it pulled down and went up a little bit higher. See, from here to here, a little bit higher, not a lot higher, a little bit higher on what? Only 1500. Okay, so notice when it did that here and did that here, we popped down. Or here it went up on 1900, here it came up a little bit further on less volume, had no more strength, exhausted. This bar closed down, right? We've got our cluster here, and the market goes down. Again, I'm not looking for big moves, right? I'm just looking for, like this, for example, is a 10-tick chart. So each one of these bars, 5, 10, 15, 20, 25, 30, 35. We're just looking for that quick move, right? to take one of those out of the money binaries, 15, 20 bucks, let it go a couple strikes and double our money. I always equate this to like a marathon or like running up a mountain, right? When you're starting, you're like, all right, we're gonna take this mountain. I'm going, chug, 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 and you're pushing up that mountain. You're fresh for the day. You're pushing up, right? You get part way up the mountain, right? Whew. You kind of slow down, take a little break. You push a little bit harder, right? And you might get a little bit further up that mountain, yeah, but not with as much steam, right? And it's like, oh, I got to pull back. I'm gonna push. I'm gonna push. Man, I just don't have anything left, right? When you're pushing higher on less volume, you're gonna expect a pullback. Now, if you're going higher on more strength and more volume, should you be expecting that pullback or expecting a trending situation? The market's going higher on volume, then it's going even higher on more volume, going higher on more volume. That's expected for it to keep going, right? But when you go a little bit higher on less volume, it's like, hey, they're trying to push it up, they're trying to go further, there's no momentum there. Expect a little move back down, or sometimes a big move back down. So we call power play one. Okay, can you see how that's in a ranging day? You're not really sure when to take it and when not to. We look at this volume analysis to give us an idea of, hey, if it's making like big up, down waves, all right, when we see a wave that came up on 1900, then it goes up just a little bit further and hits some resistance here. You see that with that cluster at like 1500. Hey, that's when I'm going to be looking to go short, okay, on one of those low risk binaries, double my money and get out. That makes sense when the market goes further on less volume. Then we're looking for a turnaround. What's the opposite? So we call it power play two. Right here, when you see this market come down, see this last push here of 30, and it came down on 38.50 of volume, right? Then we see the market makes a big pullback up and then start to come back down. You see this? We're kind of starting to range now, right? And be kind of volatile, shooting down and shooting up and shooting down and shooting up and shooting down, just volatile back and forth. But notice here, this wave came down here on 38.50. This push here came down on how much? 56.40. So it had more, this push down had more volume, didn't it, than this here. And notice, even on more volume, see here the market was coming down and made this big pullback up. It's like, no, we're going to push down again. It came down on more volume, but couldn't even get back down to where it was before at 38.50 volume. So remember, this first example was it went a little further on less. So you expect a pullback. Here, it could not even get as far on more. Even with more volume in this push down, like a good amount more, 5,600 compared to 3,800. This push here, 3,800. This push, a lot more volume. It could not even get back down to this same level. You see these yellow clusters here showing a big battle, and you see a reversal bar. Then we're going to get in and ride that back up. Okay, and again, we're not looking for a big, huge, long move. We just need one of those low-risk binaries to be able to move a few strikes, if we can, to double our money and get out. So does that make sense there? And we've got a lot more training on these style of, systems and stuff over at apexinvesting.com. But that is just one of the ways we look to trade a volatile market. A market that's zigzagging up and down. Is we want to see the volume in those zigzag moves. And we're either looking for it to go one of the zigs or zags to go a little further on less volume. Okay, that means, hey, we went a little further, but we're exhausted. So it's going to pull back, potentially, right? Or, hey, it was trying to push hard back down. It pushed back down on a lot more volume, but even on more volume, it couldn't even get to where it was before. So they tried pushing it back, but nope, it's rejection, going back the other way, ride it back up. So in a volatile market, we don't want to just take every zigzag. We don't want to just take every turnaround. We want to have a reason for it, right? We want to see either it went a little further on less, so it's exhausted, or we want to see that it could not even go as far with more volume, so it's rejected. We're looking for exhaustion or rejection to tell us, you know, which one of those turnarounds we want to look at potentially taking with a low risk out of the money binary. Okay. And again, you know, what we're wanting to do there, we don't, because it's such a low risk, we don't need to put a manual, you know, stop in place. We're looking to go for a 1-to-1 ratio. You know, if we bought it at 15, let's get out at 30. If we bought it for 20, let's get out at 40. Let's just look for 100% return on our money, looking for these quick turnarounds with a low risk binary, a quick move, a volatile market with either rejection or exhaustion to lead the way for us, telling us what to do. Okay. All right, guys. Well, again, today was just kind of a quick webinar. Wanted to review that with you, kind of give you some ideas of how you actually can, because a lot of people think, I can't trade those markets. I can't trade volatile days. And there are ways to trade it if you know how to do it and you have the right tools. Okay. Jonathan, you said, do you place a sell then when you do your buy? Yes, Jonathan, you mean to take profit, Jonathan? Is that what you mean? Yes. For example, let's say we were looking at this entry right here, Jonathan. Okay, and obviously this is not a live chart, but if it was, okay, and I saw that this market had come down on more volume, right, than here, and see these yellow little lines there, that's what we call clusters. Those are high volume nodes showing, hey, it's moving down, but boom, 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 wait a minute, it's getting some rejection here and we've got a turnaround, right? And I see this bar starting to look like it's going to close up. I'm looking then to pick my right strikes. Like if I was watching this live, I'd see it coming down. I can see this number live of, hey, there's already more volume and it's having trouble here. It's starting to get rejected here. We've got a cluster and now another cluster. This bar looks like it might close up. I'm going to be then, you know, going over here and looking at, and again, this is not a live trade or not even the right market, but, you know, I'm going to then be looking at, okay, what are my strikes available? Okay. And, you know, I'm looking at this chart saying, hey, I don't really, if this turns around, I don't really see a lot of support, you know, any major support level or resistance level until up here, this green level. This is our ice levels. It's a high, you know, high volume level from the past here, from yesterday. And I'd say, okay, you know, so from here to here, I've got a pretty wide open space. How many ticks do I have between here and here? Okay, so it's X number of ticks. That looks like I've got a clear field, right? I don't have a lot of obstacles on the course, you know, between here and say in here. So that's going to be however many ticks of a move. Okay, so that many ticks of a move, do I make, you know, where do I make the most move from? This $11 one going up a few strikes, or this 14 going up a few strikes? Okay, so let's say I just happen to choose this $24 one. Okay, Jonathan, does that make sense? I'm just kind of, this isn't a live chart, so I can't show you the exact one. I'm trying to walk you through how I would have done this. Okay, like I'd be seeing, okay, there's a potential setup here. I see this possibly happening. If this bar closes up, I'm going to be looking to enter just a couple, you know what I mean, right above this bar. Where am I looking to target? Okay, well, I'm kind of seeing what's ahead of me here. I'm looking down the street. Is there any obstacles? Okay, so I can potentially see it going back up around here. How big of a move is that? Great. Based on that potential move, which one of these binaries give me the most bang for my buck? Remember how we talked about earlier? Well, it's probably not this one, 82 going up a few strikes to 89. It's not this one, 7 to nothing, you know? Like, okay, it's going to be right in here. All right, so I think this one, just as an example, I think this one's going to be my best bet. And so I'm going to get ready, you know, on this contract here. And if that bar closes up, goes up a couple ticks, confirming that it's a turnaround for me, then I'm going to want to place this order and buy it. Okay, great. So I'm in the trade. And where did I buy this at? Well, I bought it. See, it says +1. It's in my open orders. Bought it for about 28 bucks. Okay, so if all I'm looking to do for this particular strategy is double my money, then what do I need to do? Well, if I bought a contract, the way I get out of it is to what? Sell a contract, right? So since I bought it, if I just click it, Nadex will automatically open a ticket already marked what? Sell. Okay. What I can do is say, okay, a limit order, because I don't want to sell it until when? Well, if I bought it for 28 and I want to double my money, I want to sell it when it gets to 56, right? So I have a limit order at 56 and I press place order. So now what do I have here? I have an open order that I bought for 28 bucks. I now have a working order to sell out that contract when it gets to a value of 56. So I'm kind of done, right, Jonathan? Does that make sense? Okay, again, this wasn't a live example, but do you see how I walked through that? Do you understand now what I'm looking for on the chart? I see the setup could potentially happen, and I'm seeing that potential turnaround. I'm going to go, first of all, look at how big of a move I can possibly expect. Where's my level of resistance? What binary gives me the best bang for my buck with that type of a move? I'm going to have that contract open and ready to go when I see, you know, while I'm watching that bar close up, saying, okay, ready, set, go. I'm going to place my order. Boom, the order's in. I'm going to immediately go in and manage that order and put my take profit in there, and then I'm kind of just waiting, right? Make sense? Okay. So again, guys, there's a million different ways to trade these volatile markets, but this webinar, I just wanted to share with you one of the ways that we do it over at Apex, one of the strategies and systems we use, one of our Apex proprietary indicators that we use, that oscillation detector. And, you know, and the reasons behind it. It's not just some random indicator just telling you buy or sell. Do you understand the reason behind it? There's volume reasons behind it. You got a lot of strength coming down that couldn't move the market, and then it hits these yellow clusters. It's rejected. You've got to push further. Nope, rejected on low volume turnaround. Reasons before it. Not just random ridiculous crossover indicators or red green. There's reasons behind it of volume moving the market. And that's when you don't want to just take every volatile turnaround in the market. Why? Because the market is what? Volatile. It can get you, right? You want to have a reason for trading in volatile markets. Yes, you should be afraid of volatile markets if you don't know what to look for. But if you do know what to look for, of exhaustion or rejection, then you look at your levels, then you look at your Nadex strike ladders and see which Nadex binary gives you the best return and risk. All those pieces start to come together. Okay? All right, guys. Well, thanks for joining us today. I hope this helps and opens your eyes a little bit to some ways you can trade these markets. Make sure to visit nadex.com and go to the webinar section, sign up for some upcoming webinars. Hop on over and visit us at apexinvesting.com if you'd like to check out some of our free videos and strategies and systems and training courses over there. We're here to help and answer any questions we can for you. Hope you have a great rest of your week and weekend. We will see you on the next webinar, guys. Thank you so much. Have a great one and happy trading. Thank you. Bye-bye.